feel like the last couple of times I've come on the programme, I've been incredibly bearish, maybe a bear with a sore head. And I've sort of been lamenting that the market doesn't seem to agree with actually what retail investors are feeling, which is very, very nervous. So it's interesting today to see, or not see, but hear about that board turning red, because it's finally like the market is actually catching up, albeit one day, with the way that retail investors are feeling. And that's very, very nervous. So 2022, we saw a record year for outflows for retail investors, pulling money out of funds, out of the market. I think at the time I actually called it eye-watering because it was a huge amount of money. And the year started similarly, but actually now that the market is catching up with some of the data, retail investors are switching and they seem to be having a bit more confidence this month. Now, whether or not that's just because they've been so bearish and actually they've taken so much risk off the table that they're willing perhaps to go in and take some advantage of some of those value opportunities that we're seeing, particularly in the UK market, where aside from those sort of top 20 names last year, the UK market did very badly and it has presented some potential buying opportunities. So retail investors looking slightly more confident, but that just may mean because they have been so negative for the last sort of 14 months.
Emma, we have to take out what happened in October. That was pretty much the government shooting itself in the foot at the same time as putting its foot in its mouth, which is a very delicate manoeuvre. But if we look at the other lows for the year for the FTSE over the last 12 months, we kind of get down to 7,000, 7,100. Why, given the fact that interest rates remain elevated and risks globally remain elevated again in the United States and elsewhere, why should our viewers and your clients actually dip their toe now rather than waiting for a lower level?
I think it's very important to not look at the UK market as a homogenous group, because you're right, we are actually not that far off all-time highs for the FTSE 100, but it's been very much led by the top 20 stocks, very much led last year by oil and gas and those that experienced a boom because of the awful events in Ukraine. But actually, if you look around the mid caps and into the smaller caps, albeit they are more risky, more domestically focused, and therefore more sensitive to the UK economy, we're actually seeing quite compelling valuations. Now, this is very much at the edges, so I would always caveat with this is a longer term play. It's still very much more volatility to play out in 2023. But on a pure valuation basis, some parts of the UK market are looking very attractive.
It's interesting, Emma, that you focus on the upcoming spring budget announcement as a potential catalyst here. I know a lot of corporates have been dreading the arrival of April because it starts the uptick in the higher corporate tax rate. But what do you think's in the budget that could be useful in terms of how investors look at different sectors?
Yeah, I just quickly say it's not just corporates that are dreading April. Consumers are dreading it too. Don't forget things like the savings allowance is being chopped in half, so which sort of encourages people to be able to put more money in the bank in a cost of living crisis. So there's not all good things coming at all in the spring budget, but there are potentially some green shoots for UK PLC. Now, this Chancellor and this Prime Minister has very much said they are all about innovation. They're all about green innovation. They're all about bringing back growth. So we could see some tax breaks for investments, for capital expenditure, potentially for M&A and for smaller companies and for those startups. There's some talk about innovation zones, which may potentially have preferential tax treatment at different places over the UK. But these are very much, again, centred towards smaller and medium-sized companies with revenues within the UK, with growth within the UK. So time will tell, but I think the rhetoric is very much about innovation and growth, with a caveat that our balance does not look good as a country, not just because of the events in October, but also because the last few years we spent an extraordinary amount of money across the world and here in the UK, shoring up individuals, shoring up companies to get through the COVID crisis. And that money hasn't just gone away. So there is very much a pro-innovation, pro-growth agenda, with the caveat of looking after UK, the country, looking after the UK's country balance book.